So, included in the assets and liabilities of the Slimline Health Centre Limited on the 1st of 1st 2002 were the following: buildings and grounds at cost €520,000, equipment at cost €90,000, furniture at cost €25,000, stock of health food for sale €1,500, heating oil €660, contract cleaning prepaid €300, creditors for supplies to health centre €1,450, clients' fees paid in advance €5,500, investments €80,000, authorised capital €450,000, issued capital €320,000. All fixed assets have 3 years accumulated depreciation on the 1st of 1st 2002. So there's the receipts and payments account of Slimline Health Centre Limited for the year ended 31st of the 12th 2002 with all the receipts on the debit side and all payments there on the credit side. So you are given the following additional information and instructions. Number 1, closing stock at the 31st of the 12th 2002, shop €1,800, heating oil €360, electricity due 31st of the 12th 2002, €290. Note 2, cleaning is done by contract payable monthly in advance and includes a payment of €400 for January 2003. Number 3, clients' fees include fees for 2003 of €4,000. 4, clients' fees in arrears at 31st of the 12th 2002, €650. 5, wages and salaries include €16,000 per annum paid to the receptionist who also runs the shop. It is estimated that 60% of this salary and €220 of the light and heat, €600 of the insurance and €360 of the telephone is attributable to the shop. Note 6. Slimline Health Centre Limited decided to revalue buildings and grounds at €700,000 on the 31st of the 12th 2002. Note 7. Depreciation is to be provided as follows: buildings, 2% of cost for a full year; equipment, 20% of cost per annum; furniture, 20% of cost per annum. Note 8. Creditors for supplies to health centre at the 31st of the 12th 2002, €1,600. You are required to A. Calculate the company's reserves on the 1st of 1st 2002, 20 marks. B. Calculate the profit loss from the health shop for the year ended 31st of the 12th 2002 for 12 marks. C. Prepare a profit and loss account for the year ended 31st of the 12th 2002 for 36 marks. And D. Prepare a balance sheet on the 31st of the 12th 2002 for 32 marks. So 100 marks there in total. So part A. Calculate the company's reserves on the 1st of 1st 2002 for 20 marks. So that is literally just asking us to list out all of its assets at the start of the year and minus the liabilities at the end of the year. So we're going to be looking at the assets and liabilities that are included there at the top of the question, but you have to note that all fixed assets have 3 years accumulated depreciation on the 1st of 1st 2002. So there are your fixed assets: your buildings and grounds at cost $520,000, your equipment at cost $90,000 and furniture at cost $25,000. So we were told in note 7 that depreciation is to be provided as follows: buildings 2% of cost for a full year, equipment 20% of cost per annum and furniture 20% of cost per annum. So the buildings and grounds then, 520,000 by 2% by 3 years. So to date, on the 1st of the 1st, they've already been depreciated 31,200. The equipment was 90,000. Multiply that by 20% and by 3 years, the equipment has already been depreciated €54,000. And lastly then, the furniture. Furniture was €25,000 by 20% by 3 years, so that is €15,000 that has been depreciated by the start of the year. So then stock of health food for sale is an asset, heating oil is an asset, contract cleaning prepaid, so an expense prepaid is an asset, creditors for supplies to health centre is a liability, clients' fees paid in advance is a liability, investments is an asset, and then the issued capital is a liability as well. So we're going to use the issued capital figure here because this is just what we are allowed to sell up to. So they are allowed to sell up to 450,000 shares, but this is what Slimline Health Centre have sold up to. So we'll slot those into then our statement of reserves in the first. So we list out all of our assets and then we take our liabilities away. Okay, so if you want to pause that video and write in all of that information from your question. And then what you need to do is go back to your receipts and payments and the rest of your question to see is there any other assets or liabilities from the 1st of the 1st 2002. And so you can see here in the receipt side we have current account balance, so that is a bank balance at the start of the year, which is on the debit side, therefore that is an asset, so 7560 under your assets there. Then we're going to look over the payment side and hopefully you'll see that there was 66,800 there, which related to a repayment of a 60,000 loan on the 1st of the 6th 2002 with 17 months interest. So what that means is on the 1st of the 1st 2002 they had that loan. How do we know that they had that loan? We know that they had that loan because that included 17 months interest on the 1st to 6th. So 5 months of that loan related to the current year 2002, and therefore 12 months would have related to the previous year. So on the 1st of the 1st, they had the loan and they also had 12 months loan interest due. So it's going to look like this. So then you've got your loan, 60,000, and then your loan interest due is your 6,800 interest divided by 17 months multiplied by 12 is 4,800. So the loan interest is €400 per month. So then we tot up all of the assets, we tot up the liabilities, and the assets minus liabilities are our reserves. So it's €233,070. So that is your part A fully completed there. Next we have part B. So calculate the profit loss from the health shop for the year ended 31st of the 12th 2002 for 12 marks. So what we want to do is we want to look for the word shop. So we go through it, the whole question, and identify where we see the word shop. Okay, so you'll see shop receipts there in the receipts and payments, 67,000, less cost of sales. We've got our stock of health food for sale, which is for the shop, from the shop, 1,500. Then we have the purchases, 41,300. Then we have our closing stock, 1,800, which leaves us with a gross profit of 26,000. Then we take away all our expenses. So wages and salaries include 16,000 per annum paid to the receptionist who also runs the shop. It's estimated that 60% of this salary, so 9,600, 220 of the light and heat, 600 of the insurance and 360 of the telephone is attributable to the shop. So all of those expenses there then 10,780, leaving a profit from the shop €15,220. Now that is part B complete. Next is part C, which is your profit and loss for the year ended 31st the 12th 2002. Now, so all we have is our income and expenditure, and we put all of our incomes up here, all of the expenditure here. You have to be very careful that you don't re-enter any information that you've already used here. So you want to be careful that you also don't put in any balance sheet items as well. So first things that should go in, profit on shop 15,220, or hopefully if you come down here you'll see shop receipts there and that'll remind you to do it. So if you don't do it, that's important to put that in there. Now, clients' fees is first. So this current bank account, we've already used that went into our statement of reserves, and now that is a balance sheet item anyway. All we want is expenses and revenues now. So clients' fees 262,600. So what we're going to do is look up at the top of the question and see is anything there related to clients' fees. And you might see here clients' fees paid in advance 5,500. So clients' fees paid in advance at the start of the year, that relates to this year, so therefore we are going to add that 5,500 here. Then we go down to the additional information and we're going to look for anything got to do with clients' fees. So note 3 here and note 4 relate to clients' fees. Note 3 says clients' fees include fees for 2003, which is next year, of 4,000. So next year's clients' fees do not relate to this year, so therefore we are going to minus 4,000 there. And then number 4, clients' fees in arrears. So clients' fees due at the end of this year is 650, and that relates to this year. So therefore we are going to plus €650 there. So altogether that is 264,750. Then we have interest. So this is interest on investments. So if we look up here, okay, we have our investments here, 80,000. But it's funny because we do not have a percentage. We're not told what our percentage interest is here. So that is, we're not going to be able to work that out from there. All we have here is interest 2160. And then in the rest of the question, if we scan down through it, it says nothing about investments. So therefore, my investment income is just what I have seen here on the receipt side, which is 2160. So there's not going to be any investment income due either. We've no way of working it out. So that must be the investment income for the year, and we've received it all. So moving over to the payment side then, we have wages and salaries. Now 88,240, we scan anything about wages up here. There's not anything about wages down here. Well, we saw earlier on, there's nothing else apart from, we saw earlier on that wages and salaries included the 16,000 per annum paid to the receptionist, and then 60% of that went to the shop, which was 9,600. So our wages and salaries here, 88,240 minus 9,600 is 78,640. Then we have insurance. So insurance 6300, nothing about insurance up the top. Insurance, we scan down through here, and the only item that affects it is the 600 that went to the shop. So 5,700 for the insurance. Then I go back, I have light and heat, 2,900. So I've got my 2,900, and there's going to be a few workings here for light and heat. I go up to the top, I see heating oil on the 1st of the 1st. Heating oil on the 1st of the 1st, I am going to use that. We're going to use that this year. If you imagine the oil tank at the back of the health centre and there's heating oil in it, they're going to use that this year. So that heating oil, we're going to plus 660 there. Okay, and then scanning down, then we have in note 1, we have heating oil at the end of the year. So we have not used that this year, so we are going to minus that 360 here. In note 1 as well, we also have electricity due at the end of the year, €290. So we owe that €290 at the end of the year. So we are going to plus 290 there. And then we scan down through the rest of it, and we'll remember that 220 of the light and heat was attributable to the shop, so I minus 220 there as well. And that is everything got to do with light and heat. I tot them all up and I get €3,270. Next, I have purchases for supplies. So purchases for supplies, 38,600. And then I go up to the top of the question, and I see here I have at the start of the year creditors for supplies to health centre 1450. So that was from purchases made last year. So therefore, I am going to minus that because we're doing this year's accounts. We do not want to have last year's figures in there. And then looking down, I have purchases for supplies, creditors for supplies to health centre. Very last note there, note 8, I have €1,600 there is purchases for supplies, creditors there. So that there, those creditors, we made those purchases this year, so therefore we are going to add that. So tot them up, we get €38,750. Next, we have laundry. So laundry, 4,100. There is no notes on laundry at the top or the bottom of the question. Next, I have the new extension. That's going to go into the balance sheet. Then I have contract cleaning. So that is an expense. It'll go into my profit and loss. So 2,700. And contract cleaning here, I have contract cleaning prepaid, 300. That relates to this year. So I add that. Then scanning down through it, I see note 2, cleaning is done by contract payable monthly in advance and includes a payment of 400 for January 2003. So I minus the 400 there. So 27 plus 300 minus 400, 2600. Then I have telephone and postage, 1880. So no information on telephone up the top, But scanning down through the rest of my notes here, I see that the 360 of the shop, 360 of the telephone related to the shop. So I minus 360 here. That is 1520 in total. Equipment, the next item, is a balance sheet item. And then we have our loan. Now, earlier on when we were talking about the loan interest, we remembered that, or we saw that 5 months of the 17 months relate to this year. Okay, so 6,800 is 17 months interest. Okay, so that worked out at €400 per month. I multiply it by 5 months for this year, and that is €2,000 loan interest then for this year. Now, I have my receipts and payments all ticked off there. What I'm going to do now is scan through the rest of the information and see, are there any other revenues or expenses that I need to enter here. So what I have then, if you'll see there, note 7, all right, I have my depreciation. So that is what I'm going to work out next. So I have to be careful here because we have our fixed assets from the start of the year. However, in the payment side, you'll see that we have a new extension, which was 80,000, and new equipment, which was 16,000. So we can't forget about them when we are doing our depreciation. So buildings, 520,000 plus 80,000 multiplied by 2% is 12,000 depreciation on buildings. Then we have depreciation on equipment. So we have 90,000 plus 16,000 multiplied by 20% is 21,200. And then we have our furniture. So our furniture, 25,000, there was no purchase of furniture during the year. We multiply that by 20%, so that's the 20%, and it's €5,000. So we tot them all up, and our net profit for the year is then €107,350. Then we add our reserves from part A, that's €233,070, and that is profit and loss balance 31st the 12th 2002, €340,420. Now, next part for 32 marks is to prepare a balance sheet on the 31st of the 12th 2002. So what is our balance sheet? It is a list of all of our assets and liabilities at the end of the year. So we'd lay it out first of all, just take 2 minutes to lay it out, and then what we'll do is we will put in all of the fixed assets here first of all, the tangible fixed assets. So we have the buildings and grounds, the equipment and the furniture, remembering that we had a new extension and new equipment as well. And then remember for our depreciation that all of our fixed assets had 3 years accumulated depreciation. And then we also depreciated for the year. But remember in note 6, we read this out earlier on, it said Slimline Health Centre Limited decided to revalue buildings and grounds at €700,000 on the 31st of the 12th 2002. So let's have a look. So our buildings and grounds there, 700,000, no depreciation and 700,000. Now we need to make a revaluation reserve then. So the difference between the cost and the new value, so 520 cost and the other 80,000 cost is 600,000 is the cost in total, and then the new value is 700. So what is the difference between 600,000 and 700,000? That is 100,000. So that 100,000 represents the difference between the cost and the new value. Then what we have to do is add back in from part A. Remember, we got the depreciation for 3 years. So there was 3 years depreciation accumulated on the buildings as at the 1st of the 1st, 2002. So we add that back in, and then we add the depreciation for this year back in also. So that is your revaluation reserve. Up in our equipment, we had 90,000 plus 16,000, so 106,000 was the cost. And then we have our 3 years accumulated depreciation, which we got from part A, and then we add that to the depreciation for the year, which we worked out in part C. So in total we have €75,200. So minus one from the other, and we have a net book value 30,800 there. Then we have our furniture, at cost. So the cost didn't change, it was still 25,000, but the depreciation did. So we had 3 years accumulated depreciation there from part A, and then 5,000 then from part C. So that is 20,000 altogether. So your total tangible fixed assets are going to look like that. We're going to add in our investments, 80,000. Now remember, we need to think about investment income due, but in this question, we weren't told how much our investments were, what percentage interest they yield. We were just told how much the interest was that we received. So we have no investment income due in this question, but do look out for it in other questions. So the next item that we have that we can slot into the balance sheet is our authorised and issued capital, which will go down in our finance by section. Then we have our balance, 9,500, which is going to be brought down on the credit side, which is an overdraft. So that is bank overdraft, 9,500 euro there. Then we have in note 1, closing stock of shop and heating oil, 1,800 and 360. Then we have our electricity due in note 1 also. Then we have cleaning prepaid in note 2 of 400, which is going to go into current assets. Then we have clients' fees for 2003, which is clients' fees prepaid. That is a liability, so that goes into creditors' amounts falling due after 1 year. Then note 4, we have clients' fees due, 650 euro. Then we have note 8, creditors for supplies to health centre on the 31st of the 12th 2002, 1,600 euro there. So we're at the point now where we have all our assets and liabilities in. All we need to do is tot it all up. We have to bring in our profit and loss balance as per every balance sheet, and that came from part C, where we got 340,420, and now our total net assets and our capital employed are 803,620 euro.